Felix here. I want you to understand why the market went up today, because it's really, really important, and you'll need to know whether you can make money out of this just today and tomorrow, or whether this is a longer term trend. Has the market actually genuinely changed? So stick around. First of all, we're doing a live trading training today where you will learn how I made 74% return on capital employed so far this year alone, and you might want to join it. FelixFriends.org/webinar. We'll do some live trading together and everything as well, so check it out. So what's the story here? Well, the ADP employment numbers, that's basically private sector employment, has risen 177,000 jobs. They created 177,000 jobs. You might be thinking, well, that's great, isn't it? The economy's growing, job market's still strong. Well, no, it's actually weaker than we previously thought. And what that means is that the Fed might have achieved something here. The Fed might have achieved slowing the economy down, and what Jerome Powell says again and again and again is that he needs unemployment to go up. He needs jobs numbers to get worse. Well, they just got a lot worse. By comparison, the previous month we got like 350,000 jobs created, if you believe in the numbers. I'm always a little bit cautious with these kind of numbers, but essentially that's the story. The official numbers are showing things are changing, and then at the same time we also got the GDP data out, and that was revised downwards. So what does that mean? It means last quarter the economy grew less than we previously thought. So that again is a bullish indicator for tech stocks, because tech stocks really hate higher interest rates. And it's an interesting story with interest rates here that I also want to explain to you just in a second. So are we going into this Goldilocks moment where the Fed might have actually achieved the bizarre thing they set out to do, which was higher rates, okay unemployment, and an economy that's growing at 2%? Like, that would be sort of like the perfect soft landing, like landing without a landing gear on a bit of tarmac that's too short. That's would be essentially what they've achieved, and therefore I don't believe it. And why do I not believe it? Because they've done so much and they're shredding money every month. No Federal Reserve has ever been this aggressive in the history of the Federal Reserve. So I think what you're going to see is that in 6 months or in 12 months the economy is going to implode, and maybe it'll be just after the next elections, and there'll be nothing to do with manipulation of data out there. But let's talk about interest rates for a second, because what you would expect is that borrowing costs would have gone up a lot, right? Now they haven't. Why not? Americans have 20 and 30-year mortgages. They're fixed. So it doesn't really matter all that much to them. Sorry about the wind, guys. It doesn't really matter that much to them. There's a typhoon coming here, so that's why it's a little bit windy. They haven't really had an impact because no one's really taking out a new mortgage. What about corporates, you're thinking? Are their borrowing costs going through the roof? No. Why not? Because big companies sit on a huge amount of cash. Some of them are making billions of dollars a year in interest. So they've been borrowing smartly, loads at low interest rates, because they're smarter than the US government, who are now issuing longer term debt, which is just madness, just saddling taxpayers with higher interest rates for longer. So it hasn't had an impact on the private sector, but it has had an impact on the government. And that's why rates have to come down at some point, because the US government is now spending more on interest than it's spending on defense. And in a country that loves defense as much as the US, that's an unlikely tale. So it also just means that there'll be less government spending, and government spending just becomes more expensive. So at some point there'll be political pressure to do that, and it'll also slow the economy because the government is spending less, right? It's going to be much harder to get any kind of spending bill through Washington at the moment because there is so much debt about. So the Fed, in a really weird roundabout way, seems to be achieving something here. My concern is just that they're achieving way more than people are expecting, and I think it's going to go south. But in the short term, I think you're going to get another tech rally here, which is lovely. We're going to enjoy it. And really what you got to watch out for is on Friday, the private non-farm payroll data. That's really important. That's the most official important employment data. And then of course the September Fed meeting. Now if this data persists the way it's coming in, then I think they're going to do nothing in September. It might be another skip, possibly. I still think they'll do another rate hike in November. And why? Because they've got PTSD from the 70s, where rates went lower and higher 3 times, and they keep causing inflation, and they don't want to repeat that. So they're going to err on the side of doing too much, and that's also an interesting thing. I think we can trade. So I would say I'm slowing down my stock purchasing at the moment because I think they're pretty expensive, and I'm still buying bonds because I like the setup. Basically, you buy a 10-year bond right now. If interest rates go down 1 percentage point, you make 10%. That's sort of the idea, not financial advice and all that, but that's the theory. And with stocks, I'm going to be a lot more selective. I'll put out a video today on my sort of September buys. Of course, I'll share that with you. If you want to see what we were looking at in August, I think it's still a really good list to go through. Things haven't changed that much. Check it out. I'll put the link on the screen here for you. And come and join me and really learn how we can make money in all markets. Because for me, any movement is an opportunity, up or down or sideways or tailspins. It doesn't really matter. As long as it moves, we're happy. If it doesn't move, we can also make money out of that. So come and join me. I appreciate you watching and tuning in. Thanks so much. I hope to see you on the next one.